to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable where we talk about current market conditions and answer any questions you might have. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Also, Carl, Ed, James, Brad, can you guys type in? If you can hear me, just type in yes. Still want to make sure that the audio works correctly. Andre, let me know if you can hear me. Disclosures are very important. Please read them. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk. Thank you, Carl. Thank you, James. Andre, welcome. Brad, welcome back. If you're new, all familiar names, at least first names are very familiar. I don't see anything beyond the first name, but if you're new, welcome. Say hello, type in first. Always want to welcome new subscribers. If you haven't seen the slide, I encourage you to visit optionsclearing.com, the link on your screen, to understand the risk and suitability associated with trading stock and options. I'm not a financial advisor, not registered with FINRA nor SEC. I'm here to show you what I do in my own account based on my own risk tolerance level for general education information purposes only. Before we talk about trading plan, right, the goal is to become disciplined trader, confident trader, have a repeatable process that takes time, repetition. We do have one-on-one coaching program, which I encourage you to sign up. We do have a, if you don't have one-on-one coaching, if you're new to trading, you don't have a trading plan, highly recommend that. So let's talk about, not software upgrade, but the market, right, market conditions. So looking at the stock forecast toolbox, before the Jackson Hole, right? We just have a Jackson Hole announcement. I assume Powell is still speaking, right? Going into the event model was neutral, right? QQQ dropped to 50-day moving average, Bitcoin dropped to 50-day moving average. And going to event model basically says 632 is your support, the 640 is overhead resistance, and we're currently trading at 643, right? 643. So if you look at the interest rates, right, if you look at the interest rate decision, you can see a very sharp drop in 10-year yield, right? With the expectation, what the Powell said basically is that, you know, the committee is more concerned about employment, the signs that employment market is cooling off and decelerating. They're more concerned than inflation, right? They have dual mandate, inflation, you know, full employment. So now they're concerned about full employment more so than inflation. So immediate reaction is interest rates are down, especially the 2-year yield is leading a sharp decline. I don't know if it's a new signal. Let's review. Very similar to the Liberation Day, right? Whether it's April Liberation Day or August Liberation Day, right? Market reacts very quickly. It could be a positive, right, where Fed is going to lower interest rates to avoid the recession or, you know, rise in unemployment, and then the market rallies like it did today, or like it April or August 1st, you know, probability of recession is increasing, and that debate is still on, right? The immediate reaction is interest rates sharply lower. I would say no new signal, but still revisiting the August Liberation Day and, you know, May Liberation Day. And dollar continues to be weak, right? But I would say no new signals in both. High yield is up, right? Actually, probably year-to-date high. Right? So people, ample of liquidity, people are not concerned about any dislocation. So high yield market is up. VIX is sharply down, 14 handle, revisiting the recent lows, and the usual suspects, right? Semiconductors, sharp rebound from the 50-day moving average, right? We pierced 50-day moving average, sharp rebound above 20-day moving average. QQQ continues to grind higher off of 50-day moving average, and spiders are revisiting all-time highs. Small caps are main beneficiary. You have a new signals in small caps. Year-to-date high, right? So we have a year-to-date high in small caps because they are the main beneficiary. If there is no recession and interest rates will be lower, then who is benefiting from that are small caps, you know, your regional banks. Let's see how the home builders should be up too as well. Yeah, and home builders, right? So home builders are up 5%. So that's initial reaction. ARK Innovation is up 5%, almost 5%. I mean, gold is up, silver is up, so everything is up today, right? Today is one of those days that you can, some people interpret this as positive news, some people are concerned and they're hedging, right? So silver is up 2%, gold is up. Metals and miners are up, copper is up, China is up 2%, Bitcoin up 3%. So initial reaction is positive. Nvidia is up, it was sharply lower this morning, and, strong rebound. When is Nvidia earnings? 5 days. So next week we also have Nvidia earnings, and SPX is above 6,400, right? We were talking into this event that 6,400 was support, became overhead resistance, and now we're back that this is your support, right? So this is support number 1. This week low is 6,300, support number 2, right? This is positioning data, gamma exposure, positioning data at different strikes on cash settle index. And then the main overhead resistance is 6,500. You still don't see a lot of bets outside of 6,500. I mean, now people will do it, but that's your main overhead resistance is 6,500, and we, very, not that far away from that level. Any questions? And so far, if you look at the 30-minute chart, as the 1-hour chart, right? So we are right at August high, all-time highs, right? We're basically retesting all-time highs is around 64.80, 64.75. Any questions? All right, so at this point, I mean, obviously market was oversold, and any positive news, it rebounded from the 63.50 level. Now it's overbought, right? Any negative news is oversold. A lot of it, next main event is September, right? I guess September, I think 17th, or the actual decision on the rate cuts. So I think 25 basis points after this Jackson Hole speech from Powell, probably very high probability. I think going into the event, it was 70%, now it's probably close to 90%. But the 50 basis point cuts, probability of that event was lower, now it's significantly higher. So if Fed will cut rates in September by more than 50 basis points, by more than 25 basis points, 50 basis points, then this rally will continue and will take out this level, right? If they cut only by 25 basis points, then, I mean, market could still grind higher, but, a lot of it will now depend on the unemployment data, right? Because rising unemployment is not good, right? And there are already signs that, employment market is weakening. All right. Questions? All right, we have full house. This is great. Okay, so in terms of, let's sum up this week in terms of, no, first let's talk about, so let's go through those rehearsal exercises. This is what we usually do. So going into the event, let's see it kind of change. Let's see SPX. So I'm looking at the cash settle index, right, at the options data, futures data, very similar. So again, this week low is your gamma flip. So at this point, as long as the market is above this week low, 63.50, bulls are in control, right? We're in green. You do have, so now, okay, 6,600 is already rising. So you can see 6,600 is rising, but main overhead resistance is 6,500. So if I look at the expiration, if I look at the September expiration and October expiration, right? One standard deviation will make new highs, and we break through the 6,600, right? So this is the first level. We're already at 6,500. So the next, actually, biggest positioning now is at 6,600. On the downside, we were at 6,300. Right, the lows, the recent lows. Right, so one scenario, we break through this level, right? Scenario number 3, and we are revisiting 6,200, right? Maybe Unemployment data. Right now, everybody's focused on the employment, right? Inflation is kind of behind us, at least for now, until if there's any signs of inflation, people are going to ignore them. So, that's what Powell said. He's more concerned about employment. So employment is at the forefront right now. And then tariffs and inflation is secondary. Scenario number one, we're heading higher, right? NVIDIA maybe a strong earnings, Fed cuts by 50 basis points, no signs of recession, full employment, no signs of inflation. And scenario number one, we break to the 6,600, continue to make new highs, right? We're already at new highs. Scenario number two, we're trading in the range, right? Because PPI data was higher than expected, right? CPI data, CPI data was better than expected. PPI data was worse than expected. Employment data is worse than expected. Came out, in September, if you have rise in PPI again and rise in unemployment, then, scenario two, we're going to trade in the sideways range, right? All right, so how many of you say scenario number one, we're going to break 6,600, break the current new highs and actually break the 6,600, continue to go higher? How many of you say scenario number two, we're trading in the range, right? We're still going to keep this week low, but trade in the range, right? We're going to have a positive news like Powell's speech and negative news like unemployment data. And from seasonality point of view, it's a pretty volatile period of time. So scenario number two. And then the third scenario, we're going lower, right? Revisiting 6,000. All right, Andre, Carl, Ed, Gene, James, Fred, Bob, Michael, what do you guys think? How many of you say scenario number one, we're going to make new all-time highs and take out this all-time high? Scenario number two, we're trading in the range. And scenario number three, we're going to continue going lower. Andre, scenario number two, thank you. Carl, what do you think? Ed, Gene, James, what do you guys think? Two. Okay, everybody two. I'm going with two as well. I'm going with two as well. I'm going to go with two. Again, from seasonality point of view, I think it's a little bit too quick, too far. And from the risk perspective, right? We already have signs that the economy is decelerating, the employment market is decelerating. Tariffs are higher, the baseline tariffs are higher. I mean, market could stay overbought longer. It doesn't mean that the market is going to sell off. I was looking at the previous, I was looking at the 2018, right, the first administration when the interest rates tariffs were higher, right, in 2018. This is the first wave of tariffs during the first Trump administration. We made new highs all the way to October 1st, right? So we were making highs all the way to October 1st. Marginal new highs, right, from the Jackson Hole up until October. Basically sideways, maybe marginal new highs, but still trading sideways. And then in October, sharp pullback. So that's the previous administration. Last couple of years also wasn't really a strong September, right? We did have a pullback here. It was in August and September, 5-10% pullback in 24. We had 5 to 10% pullback in 23, right? In 22, we had a pullback. So September, October in the past few years and during first administration has been volatile. So I probably would not chase the market, especially at these levels. This is where I would maybe start trimming your long positions. 2. All right. Let's see. So some of the long positions that I have now, banks, right? I think banks are doing well. Stocks like JP Morgan, Bank of America, Berkshire Hathaway, marginal new highs, right? So XLF is leading the market, marginal new high. Industrial, strong rebound. In XLI, up 2%, not new all-time high, but near all-time high. So stocks like JP Morgan has been volatile today. It's up to 95. General Electric, right? Those are strong stocks that continue to outperform. Today's signal, if you look at the active trader, right? This is another place where we provide long signals. And there's a history. You can look yesterday. We had, what do we have yesterday? Johnson & Johnson, right? So Johnson & Johnson, some of the healthcare stocks are doing well, right? Strong momentum to the upside in healthcare. Today, it was under active trader, was MasterCard. So MasterCard was a signal today. Also, even before announcement, MasterCard was one of the leading stocks and continues to break out. So if you're looking for signals, then active trader, right, is where you can find daily signals, right? And again, we propose that you have 4 positions at a time with maximum loss of 2.5% of your portfolio per position. So for example, MasterCard, you can day trade, right? You could have bought it in the morning. You know, obviously Jackson Hole meeting could have been the other way. But you know, the idea is that you're risking 1% and you split the trades into 2, right? And overall, you don't risk more than 2.5% of your portfolio. You can do short-term trading with this signal. You can hold them overnight, but that would be the idea, right? Whether it's a MasterCard or Johnson & Johnson. If you look at the weekly trader, active trader, the model runs every day and posts these signals. You know, after 6 p.m. Central, you get an email with these signals. Weekly trader, the model runs on Sunday. Model runs on Sunday and provides predictions on Sunday. The holding time is anywhere from 1 week to 2 weeks, right? It's a 10-day prediction. Signal usually, you can hold them for a couple of weeks. So CSX, right? So this week CSX, right? This was posted on Monday. I mean, if you bought it on Monday, obviously CSX is in strong uptrend. Utilities in strong uptrend, right? Continues to grind higher. That's another signal, Nike, right? Nike was a signal on Sunday and also is doing well. So you have, based on how long you hold in the position and your outlook, you have short-term signals every day. You have weekly trader posted on Sunday, monthly trader, right? Monthly trader is also signals get posted on Sunday, right? If you want to hold it even longer, right? Like Leonard was one of the signals the Sunday, and you can see Leonard is also in strong uptrend. So these are plenty of signals, right? You can also trade stock or options. If you're more comfortable trading options, you can go to options. The idea is the same, right? In terms of support and resistance levels are determined by stock, and you're risking in here, you're risking 5%, right? If you're doing monthly, if you're holding it for a very long time, for a couple months, then I wouldn't risk more than 5%. But you can buy option, right? You can buy September 115 call if this is something you wanted to trade. So you have monthly, you have signals. Active trader gets posted every day. Weekly, monthly trader every week on Sundays. And these signals, not all, but some of these signals I trade in Elite Circle. So if you go to Trader Log, you can actually see all of my trades. I closed TJX, right? I did sold the call spreads on TJX, closed that trade, that was profitable. I put QQQ put spread, right? So far, I'm not doing well, but this was a hedge. This was a hedge for my long positions. So I have JP Morgan, I have Meta, I have Tesla positions. So the other positions, these are all were signals. JP Morgan is doing well now. Meta is doing better today, rebounding, and Tesla is in strong rebound as well. So you can see different signals any questions? So that's the lead circle where you can find these trades. You can enter, go to SMS alert, enter your phone number. You will get SMS messages every time I trade. By entering phone number, you'll get an SMS message as well. All right, any questions so far? All right, so these are some of the opportunities we discussed. Again, this Sunday, model will run again, so all of these signals will get updated, and then I will put on another trade. We have a newsletter, free newsletters. You can go to market newsletters, and every Friday and every Monday we send email. Right, we do have strategy roundtable, which you can find. We have a YouTube channel. You can go to YouTube, sign up, subscribe to our YouTube channel, and you know, we post in our some live training room recordings. The good example of what we're doing. So I encourage you to review that as well. Any questions? What else is there? In terms of trading plan, right, we talked about becoming disciplined trader, confident trader in live trading room. First of all, I encourage you to join our one-on-one coaching program. If you're new to trading and you want to join coaching program, we can actually create a custom trading plan for you, because everybody is different in terms of how much money they're managing, in terms of how many years of experience, what their goals are, right? But trading is business, like business. You should treat it like business. You should have a trading plan in writing. And these are some of the key points we discuss in trading plan. One is portfolio allocation. At this point, I think market is overbought, continues to stay overbought. I would raise cash, especially use these type of rallies to kind of decrease some of your allocations. Look at the portfolio drawdowns, right? Portfolio drawdowns. Again, we talked about 4 position, not to risk more than 2.5% of account value per position. Wait for 2 to 3 days to confirm trend change, right? We were consolidation, we're at all-time high day 1, right? So trend has changed from being down short term, now we're up. But again, it's only been an hour or 2. I would wait at least today and Monday to make a decision. Okay, we're now uptrend is resumed, or at least for a breakout to all-time highs. If we break out all-time highs, okay, uptrend is resumed, new signal. But if we can break through the all-time high, then, you know, short-term market is under pressure. So 4 positions, 2.5% of account value per position. Sorry about that. Be long and short the market at the same time. All right. Wait for volume VIX, right, to confirm the change. Let's see. Let's look at the volume today. Well, this week. I mean, volume I wouldn't say is extraordinary, but nonetheless, I think we made marginal new highs, right? Let's see. Yeah, well, to the penny, right? We're kind of August high. So we're at August high again. Any questions? All right, what else? Look for ABC pattern, wait till end of, till end of day to make a trading decision, right? In terms of trend, not trading, but trend and rebalancing your portfolio, right? At this point, I would just wait. A lot of people ask me, do I close the QQQ put spread? I mean, wait for the confirmation of a breakout. At this point, the position is not down 50%, so I'm still waiting. And then being self-aware, emotional intelligence is very important. We talked about prospect theory, we talked about risk aversion. So it's very important not to only predict what Powell is going to say, but also how you will react if the market is going against you, right, and what your decisions are. All right, 10 o'clock. That's all I have for today. Any questions? All right, Andre, Carl, Chuck, Don, Ed, Eric, Gene, James. Eric, I know you joined a little bit later. Any questions? I think the main point is just keep an eye on interest rates. For now, no new signal, but obviously we're trading to the downside, so that's positive for the market. Right, but we'll see if we take out the August lows or not. All right, that's all I have for today. Thank you very much, and I will see you hopefully Monday morning in the live trading room, or Keith is going to do closing bell today. I encourage you to either try one-on-one coaching program. I mean, that's financial commitment and time commitment, or try Elite Circle, right, or one of our tools memberships as well. Thank you very much and have a great day.